Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Friday, May 1, 2015. Inside the numbers tonight, we're going to discuss the S&P E-mini contract and the SPY. We're going to talk about crude oil, gold, interest rates in the bond market, the US dollar and the euro tonight, and we'll talk about natural gas tonight. And we've got a lot in store for next week, so put your seatbelt on. So here we go. So here's the daily chart of the SPY. And, yesterday we tried to break down. We came right into the support level at about 207.50, and we bounced up. And today we went higher. And so here's where we are. I have been giving you, remember, let's go to the hourly chart. And I have been giving you the level of 2089. In the E-mini contract. Let's go over to 2089, okay? 2089 is here, okay? You see where we tested 2089? You see here, 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 okay? These are all tests of 2089, okay? 2090 in that neighborhood, okay? So, and here's a pivot high here, and then we failed. So you can see the importance, and if I go over to the 10-minute chart, you'll see the importance of that as well. 2089. Okay. Here's where we chopped around 2089, up and down, up and down, up and down. So you can see that it's important. So what am I saying? What I'm saying is, and I know this chart looks a little busy, but I put these lines in here for a reason. And by the way, I use these lines as I trade. Okay. These tell me where the buy and the sell points are. So what I have is, let's work from the bottom up. Here is, let me back up a second. So next week is going to be a wild week, okay? There's a lot of markets culminating that are coming into turning points between today and Monday, give or take a day or so, okay? So I've been telling you that a big move is coming in the S&P. And I spent the last 2 days racking my brain trying to figure out which way it's going to be. And really what I've come up with is I've built a case for both directions, and that's the problem. If I knew which way it was going to go, believe me, I would tell you. I wish I did. It's not that easy. But I'm going to give you the case for the upside, and I'm going to give you the case for the downside. So the upside is we closed above 2089. Okay, well above 2089 today in the E-mini contract. And we still have some unresolved numbers on the upside that I've been telling you about for a while. We also have unresolved on the downside, but we'll get to that in a minute. So further that, we're going to talk about the US dollar later, and we're going to talk about the euro. But right now, I just want to mention one thing. Over the course of the last several months, the stock market has been rallying with the US dollar, okay? So keep that in mind. We're going to talk about the dollar in a little while, but the dollar, as far as I am concerned, as far as my work is concerned, has made a low, okay? At least an interim low. I think today will mark a low, or maybe Monday will mark a low, but we're going to have made a low in the dollar, which should send dollar higher, euro lower, we'll talk about that later too, but the stock market higher in this case, okay? The other thing is that every time we tried to break down, okay, basically all year, the market had a bid under it and it got saved. No matter how low we went, here, 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 we just couldn't break down. In fact, I'll tell you that usually when you hit a level more than 3 times, it's susceptible to break. Much higher probability of breaking that level after a third hit than not. So the probabilities rise considerably. Look at this. 1, 2, 3, 4, almost hit. 5, 6, and then 2 almost hits. So we have 6 and 3 almost hits, and we didn't break it, okay? Then you're up here. You came down, you tested this low, the 2070, didn't break, held, bounced. You came down, you tested the 2070 the other day, held, but yesterday, held, bounced. Okay, so you can see where I'm getting the case for the upside. The path of least resistance right now is up because the sentiment is relatively good. And I know that everybody is talking bearish on TV, but that's why I say the sentiment is good, meaning it's good for a bullish move in the market. Whenever the sentiment turns bearish with the pundits on TV, and by the way, they're talking the dollar down, they're talking gold down, we'll get to that in a minute, they're talking the stock market down yesterday until it turned around this afternoon, or today into this afternoon. So, they're always wrong, and it leads me to believe that the bull case has more probability than the bear case. But the bear case is we still have some unresolved numbers on the downside, and the market does like to trick everybody, and today could have been a bear trap, meaning they send the market higher, they get all the shorts to cover, or a lot of shorts to cover, and they suck some of the longs, the retail individual investor, into the market, and then they open the trap door on Monday or Tuesday and send everybody down, 30, 40 points on the S&P. So that's happened many, many times. But listen, I've read this book before, and if the market was going to be weak today, next week, okay, there was a stronger than average likelihood that we would not have rallied into the close today. I don't think that would have been a likely scenario if the market's going to roll over next week. But we have to wait and see. So how do you play it? What do you do? All right. So if we stay above 2089, the market remains bullish. Once we get above 2105, and remember that number from up here all week long, once we get above 2105, that's it. It's off to the races. If you start to close hourly above 2105, you can look for 50 points on the upside, maybe even over the next week or so in the S&P. I think we're going to have one heck of a rally, or a decline. If it goes the other way, it's still going to be the same magnitude. The velocity that's going to enter the market in the next week or so, or in the next few days, is going to exist, whether it's on the upside or the downside. So what I'm saying is, I think you're going to have a better than 50-point move in the S&P one way or the other. Look how long we chopped around in here, okay? Now watch this. Let me pull out and zoom out a little bit. You see how narrow this is? We haven't gone anywhere. This is chopping around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, 3 months going sideways. The market is going to break out one way or the other from 12 weeks or more, but this long sideways, and the longer it goes sideways, the bigger the move. And this is why I say, and this is a pretty good sideways move for 3 months. Okay, and markets, a lot of times you'll find the move in threes. Not all the time, but a lot of times you'll find markets move in threes. And 3 months, 90 days, that's an important cycle. So I'm paying attention to this, and I can safely tell you that if you want to play next week, you can basically count on a pivot point on the upside. I'll widen it for you. 2105. You got to close hourly 2105, and then obviously daily for you to see a lot more upside potential. As long as it stays up there, it's going higher. On the other side, 2089. Okay, if you close hourly and then daily below 2089, you have a lot more downside coming. In the middle, no man's land. Don't worry about it. So there should be a pretty good roadmap for you for the S&P for next week. All right, let's move on and go over to gold. So gold put in another down day today, and I think what this is, I think this was the shakeout of the longs in the gold market. Everybody's bearish gold. Gold can't get off the mat. It's been struggling ever since we hit this peak up here in January. On January 21, January 22, we've been doing nothing but going down and sideways in gold. And I think its time has come. Let me show you why I say that. Okay, it was weak. I was beginning to question. Remember I said once we got up here, and put this line here for a reason, because that was always going to be resistance, okay? It was resistance up here, and then it was resistance again. Now, what happened was I said we would probably come down. I was looking for a move down to 1198. I'm sorry, 1195. And it was about this 20-period moving average, and I thought that was going to be a little narrow or shallow pullback. We would have an A, B move on the pullback, and then a C rally higher up into the secondary target at 1231. Now, we had a much, much bigger pullback yesterday and some follow-through today, but let me show you what happened today. Okay, it's very interesting, all right? So, all of a sudden, we go down today and we hit a low on volume. So I'm looking for a reversal here. Now we come back and we come to test it and we test it and we don't go through it and we reverse. Okay, I'm looking for a low. I'm seeing a low. Then all of a sudden, and I didn't even see this because it happened really quick, but the market spikes up. Okay, we come up and we test these highs up here and we immediately roll over and go flat for the remainder of the day up until what is this? Up until basically 3 o'clock, okay? 4 o'clock. All of a sudden, the market pops up into the close. The GLD pops up. Gold futures popped up a few dollars. Okay, it was gold futures were trading at 1172, okay? Right down here, 1174 and then 1171 and 2 before that. And then all of a sudden, right at the close, 1177.40, and that's where you have it. And the reason I bring this up is because I've read this book before. That is a tell that it's a bullish behavior going into the weekend. Don't be surprised to wake up Monday morning to an up market in gold. At the very least, you should have higher prices in gold next week. I've seen this before. I've read this book. In my mind, the majority of the time, I'm going to be right. Look for higher prices in gold. I think this was a shakeout of the longs. I don't think it was a reversal in gold. I think the short-term bullish forces are still in check. All right. Let's take a look at the gold. See this? This is the GLD 10-minute chart. Look at this last candle of the day. I mean, this is not an accident, folks. We don't go up like this in the last. It's not that much, but it's enough to tell you something. We're always looking for the market to tell us what to do. You've heard me say that a million times. Well, the market was telling me bullish gold. All right. GDX. I wouldn't be long GDX here. I'd be long gold, but I wouldn't be long GDX because the wild card is the market. What if the market rolls over next week and gold goes higher? You'll be rewarded if you're long gold, but the GDX or the miners could roll over with the market. So that's the wild card there. But that's a personal preference. Oil. You know what? Before I go to oil, I want to show you one thing. I want to show you silver. Okay. This is the silver futures contract. Now, we hardly ever, I never talk about this. I just don't trade silver a lot. No reason. There's so much to trade. I just don't. But I want to show you something. Watch this. You see this chart? See this low here? Okay. We came up and we came down for that. This is the A, the B. This is what I was looking for in gold. And then a C up. Well, you never pierce these lows here. Okay. And they normally trade together, gold and silver. But when you go look at the gold chart, that's oil. When you go look at the gold chart, you pierced the low in gold here. This was the same low in silver. Here you pierced it today and then reversed. So that's what you call a intermarket divergence. Intermarket meaning two different markets. Okay, intra-market would mean in the market of gold, maybe something relative to the gold chart itself, like a MACD diverging from the price of gold. But in this case, intermarket divergence is two different markets, gold and silver, and they normally trade together, not identical, not all the time, but generally. And you have a divergence. Silver was stronger than gold. So that's another tell. All those things. You see what I'm looking at? I look at all these different little market tells. The market is telling me bullish gold. There you have it. Okay. Oil. Look at this. Okay. So oil is still following through on our call for higher prices. We came sideways. This looks just like the S&P weekly chart, doesn't it? Right? Look at this. This on a smaller scale, and then look at this. And I know I got a bunch of lines in there, but, you know, just try and ignore the lines and just look. Isn't that very similar? Isn't that very similar? Yes, it is. Okay. Oil. So let's go back to the daily chart, and we're on a breakout, and my first target is about 60.50. Okay, we're close. All right, we're only $1 away, dollar and a half, a little less than $1.50 away, $1.30, $1.40. So what we're looking for is some higher prices early in the week. Now, there's two scenarios that are obviously going to play out, right? There's always at least two scenarios, okay? We could reach the target and continue higher to the secondary target or somewhere in between, or we can hit the first target and price could be repelled and we could have to work off some of the overbought condition for a while, consolidate a little further, and then go higher. So I'm not sure. So I'm definitely going to take some off. I'm long oil, but I'm going to take some off at 60.50 and then see what happens and see how the market reacts to that level and see what kind of pullback we have before making a decision on the second half. Okay? But this is acting as planned. You had the roadmap, you had the indication, you had the targets, you had the pattern, you had it. I gave it to you. You should have been long oil. Okay, let's go over to, let's see my notes here. Let's go to the dollar. No, let's go to the bond market. The bond market broke down a little bit, so this is interesting. So let's talk about these lines. So we had a line at 125.5. Okay, this line here. And the market supported that line for a couple days. Yesterday, it looks like it was going to support it very well, good support, and then we reversed higher. And then we broke down again today. And that's not really that much of an alarm yet because you were so close to the 200 period moving average and the secondary support at 123. Okay, so am I concerned? A little bit, but not much. I would say that if we don't hold this 123 level, this pivot low here, then I'm going to be concerned. Let's go to the longer term picture in the bond market and show you what I'm talking about. And you'll see on this chart, on the weekly chart, I put down another line because I did some calculations and I figured some levels. And what I came up with is an ugly, ugly number if this line doesn't hold. Now, this wouldn't all happen in one shot, but the next real true, heavy, buyable level of support, I mean, you can probably buy here at 119, 120, but my better level is 116. So if you remember, I've told you before when we looked at the monthly chart, I said that this was going to mark a top, a long-term, maybe like 30-year top in bonds. That doesn't mean you go straight down. You'll have tons of rallies and tons of sell-offs, and some of the rallies will be spectacular, and some of the sell-offs will be equally spectacular. But just from a longer-term perspective, I think it's very, very important to put in perspective where you are in the bigger picture, so when you take your short-term trades, you understand where your risk is. If we're in a long-term uptrend, okay, and I'm long the market and we have a little bit of a sell-off, I'm not as nervous as if we were in a long-term downtrend and we have a sell-off. I'm more nervous, and if I'm long, that's not going to hold. So that's the scenario here. So you need to be aware of that we're in a long-term downtrend that's going to last for probably decades in the bond market. That's not to say we won't see bounces. That's not to say this line won't hold for 4 or 5 points, okay, at 123. Who knows? But I'm just telling you what the bigger picture is and what the total scenario is. So that should give you a good picture. So we'll see what next week brings. Next week is a huge turn in the market. So along with a lot of the other markets, I'm going to expect a turn in the bond market too. All right, let's roll over to the dollar. Now, same scenario, okay? We came into the zone. We were looking for the zone. We were buying with 3 hands in the zone, okay? Everybody should be buying the dollar here. And today/Monday will mark an important turn date in the dollar. Now, what's the likely scenario that we accelerate on the downside? 20%. Okay, I have an 80% probability in my work that today will mark a bottom in the dollar. Okay, or yesterday, as a matter of fact. Yesterday will mark the bottom in the dollar. Here's today. Okay, so everybody should be long the dollar. You got plenty of room to get in. If you didn't get in at the bottom, it's not important. There's going to be plenty of upside to be had in the dollar. Okay. We were waiting for this zone. I couldn't spell it out any clearer for you. Should be buying it with 3 or 4 hands. Let's look at the euro. It's really not all the time, not in total, but it can act as an inverse to the dollar. Now, the dollar is made up of a basket of 6 currencies, one of them being the euro. However, the euro does trade opposite the dollar for the most part. So if you're taking a dollar trade, you don't need a euro trade, but I want to talk about it anyway because this is an interesting chart to look at. Here's what you have on a daily basis, daily chart, okay? You had these 3 nice solid up days. 2 of them were on heavy, heavy volume, as heavy as we've seen in quite a while, okay? And then today, you can make a case that this is the makings of a reversal. It's not a bona fide reversal, but this was a minor reversal, if you will. It's not a reversal to take a trade. It's just a minor reversal. That coupled with the fact that we have a turn happening in the dollar, and a turn happening next week with many, many markets, okay, leads me to believe you're going to see a healthy pullback in the euro while you see a rally in the dollar. That's not rocket science, not hard to figure out, but I just thought I'd bring it to your attention. Natural gas. What a trade. Gave it to you down here at the low. Okay, we were literally fractions of a penny off the low. Okay, gave it to you at 250. Okay, we had 4 solid up days, and I issued a trade alert to members today that we're shorting the natural gas market. Okay, there's multiple ways to do it, and because it's another market where we should get a turn next week in natural gas. Okay. Should the pullback be heavy? Well, I'm looking for a pullback in natural gas to at least 270s. Probably. Let me do a calculation real quick. Just bear with me. I'm going to another chart. I'm going to calculate a number for you, and I'm going to give you a target for natural gas on the downside that we should achieve. It'll probably take. Just bear with me. I'm doing the calculation on the other chart. Here we go. Okay. 1 second. Bear with me. I know nobody likes to wait. And okay. 260. 260 is the target on the downside. Let's put a line in there and we'll watch it next week. Okay. 260 on the downside. All right. That seems far away, boy. I'm going to put another line a little bit higher. I did have another level that came out in the calculation the first time around. It was 255. So that's pretty well down there. Okay, I don't know if we're going to see that healthy of a sell-off, but we may. Okay, we'll see. Anyway, so natural gas is going to turn. Any way you look at it, if you're playing it, it's an easy trade. It's the opposite of this trade. So how do you do it? What's the high today? 280. Okay, you're short with a stop above, a daily close above 280. If you're playing another vehicle, you do the same thing. The chart looks the same. Close a stop above today's high on a daily basis and you're out. Very, very easy short. It's the exact mirror image, 180 degrees of this trade here. This one up, this one back down. Okay, I think I've got everything I wanted to talk about tonight under the belt. If I missed anything, I apologize. I don't think so. I'm David Frost. Hopefully this is helpful. I hope you guys are making some money with this stuff. This is good stuff. The numbers are real numbers. You know it. You see it. You can go back and watch any of the videos. I've got numbers for months and months and months and months. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.